It's just a three-digit number, but it can determine whether you get approved for a mortgage, how much you pay in interest on a car loan, or even whether a landlord lets you sign a lease. A strong credit score saves you tens of thousands of dollars over your lifetime. A weak one costs you in ways you might not even realize.
The good news?
You can improve your credit score faster than you think. In this video, I'm going to walk you through 6 proven strategies, plus a bonus tip that can start moving your score in the right direction within weeks. Let's get into it. Before you do anything else, you need to know what's actually on your credit report. Studies have shown that roughly 1 in 5 Americans has an error on at least one of their credit reports. We're talking about wrong account balances, payments marked late that were actually on time, or even accounts that don't belong to you at all. Head to annualcreditreport.com. That's the only federally authorized site, and pull your reports from all 3 bureaus: Equifax, Experian, and TransUnion. Go through each one line by line. If you spot anything inaccurate, file a dispute directly with the bureau reporting it. They're required by law to investigate within 30 days. Getting an error removed can result in an immediate score jump, sometimes by 20, 50, or even 100 points, depending on the mistake. This is one of the fastest ways to see a real change. Your credit utilization ratio, that's the percentage of your available credit that you're actually using, makes up about 30% of your FICO score. If you have a credit card with a $10,000 limit and you're carrying a $3,000 balance, your utilization on that card is 30%. The general rule is to keep your utilization below 30% across all your cards. But if you really want to maximize your score, aim for under 10%. Pay down your highest utilization cards first. And here's a quick trick. If your statement closing date is coming up, make a payment before it closes. That way, a lower balance gets reported to the bureaus, and your score reflects it almost immediately. Payment history is the single biggest factor in your credit score. It accounts for 35% of your FICO score. Even one late payment, just 30 days past due, can drop your score significantly, and it stays on your report for up to 7 years. The simplest fix here is to set up autopay for at least the minimum payment on every account you have. Credit cards, student loans, car payments, all of them. You can always pay more than the minimum manually, but autopay ensures you never miss a due date. If you've already missed a payment, call your creditor. Some will remove a late mark from your report as a one-time courtesy, especially if you've been a good customer otherwise. It never hurts to ask. This one is especially useful if you're building credit from scratch or recovering from a rough patch. Ask a trusted family member, a parent, a spouse, a sibling, if they'll add you as an authorized user on one of their credit cards. You don't even need to use the card. Once you're added, their account history, including their on-time payments and low utilization, gets added to your credit report. The key word here is trusted. Make sure the person you're asking has a strong credit history and keeps their balances low. If their account has late payments or high balances, it could actually hurt your score instead of helping it. It might seem like a good idea to close a credit card you're not using anymore, but think twice. The length of your credit history matters. It makes up about 15% of your score. When you close your oldest card, you shorten your average account age, and that can cause your score to dip. On top of that, closing a card reduces your total available credit, which pushes your utilization ratio higher, even if your balances haven't changed. So, unless a card has an annual fee that you can't justify, keep it open. Use it once every few months for a small purchase, and pay it off right away. That keeps the account active without costing you anything. Every time you apply for new credit, a credit card, a loan, a mortgage, the lender pulls your credit report, and that creates what's called a hard inquiry. Each hard inquiry can knock a few points off your score, and too many in a short period makes you look risky to lenders. Now, there's an important distinction here. A hard inquiry is different from a soft inquiry. Checking your own credit score, getting pre-qualified for a loan, or having an employer run a background check. Those are all soft pulls, and they don't affect your score at all. If you're shopping for the best rate on a mortgage or auto loan, try to submit all your applications within a 14 to 45-day window. The credit scoring models recognize rate shopping and will typically count multiple inquiries of the same type as a single inquiry during that period. Here's something many people don't know about. Experian Boost is a free tool that lets you add your utility bills, phone bills, and even streaming service payments to your Experian credit report. These are payments you're already making. Now they can actually count toward your score. Similarly, there are rent reporting services that will report your monthly rent payments to the credit bureaus. Since rent is usually your biggest monthly expense, having that positive payment history show up on your report can make a meaningful difference, especially if you have a thin credit file. So let's recap. Check your credit reports for errors and dispute anything inaccurate. Pay down your credit card balances to lower your utilization. Set up autopay so you never miss a payment. Consider becoming an authorized user on a trusted person's account. Keep your old accounts open. Be strategic about when and how often you apply for new credit. And take advantage of modern tools like Experian Boost and rent reporting. Your credit score didn't get where it is overnight, and it won't transform overnight either. But with consistent effort, you can see real improvement in a matter of weeks to months, not years. Every point matters, and every good financial habit you build now pays dividends for the rest of your life. If this video helped you, give it a thumbs up, subscribe, and share it with someone who could use a credit score boost. I'll see you in the next one.